So welcome to the review of our pair. We are back at it again. So this time around I'll do what we call a top-down analysis so that we can all understand where we are in the market. We've done this before. We did this last week. We did this on Monday. We're going to do it again because this is Friday. It's the end of the week. So what did the market do? Let's go to weekly and see what the market is trying to do. So on the weekly, we notice this. The market is printed a higher high than this high, printed an even higher high, printed higher lows. This is the third higher low, and we were anticipating the third touch of this. Okay, let's go down to the daily and see whether the market has actually touched. So it's not yet touched that area. What we notice is Monday, the market, was it Monday? No, Tuesday the market dropped. Wednesday it printed an indecision candle. Yesterday it printed an indecision candle. Today is what we are looking at. Notice the market is doing this on the neckline of the head and shoulder pattern. So we are still anticipating that drop, like we still said. We still anticipated that drop all the way down to this point. We're anticipating it. We need to be patient. We're sitting on our hands. The market is printing even more formations, and I'll show you that on the lower time frame. It's preparing itself to go bearish. And then if you notice, this is a bullish candle, but the rejection wick is very long. Yeah, so it pushed all the way up yesterday, then was pushed back down by the close of day. So this is also an indication that the sellers are still in control of the market. The moving averages are still telling us that we are bearish, and with a lot of bearish volume, because if you notice they are wide apart. Okay, so those ones usually help us for more clarity, basically. I'll remove this 100 for now. That's only used on the 1 hour time frame. Okay, so our head and shoulder pattern still remaining strong. We're still at the neckline. This was a bull trap. What a bull trap is the market creates a scenario where it looks like it wants to go bullish, pulls out a lot of buyers. Then once they've all bought, it drops and takes out all their stop losses that were down here. So that usually happens when the market is just about to make a major move. So at the moment, what we are seeing is that the market is sort of consolidating. Yeah, it's consolidating between this area here and this area down here. Yeah, confirmed by touch 1, touch 2, touch 3, touch 4, touch 1, touch 2, touch 3, touch 4. So the market is bouncing off, and this is basically, it's accumulating, like some of the mentors that I've worked with talk about, that the big money or the market movers are accumulating orders. So they're just accumulating orders, they're accumulating orders, they're accumulating orders. Then eventually they'll spike bearish. So there's a head and shoulder pattern on the 4 hour time frame, on the daily time frame. And then when you go down to the 1 hour time frame, it's actually forming another one. This is the head. No, sorry, this is the shoulder, the left shoulder. We put that in black. This is the right shoulder that is forming. It has not formed yet, has not completed the formation. And that is the head. So this is also another confluential indication that the market is preparing to break bearish. Okay, and it already broke the neckline. You notice the gray area. It already broke the neckline. Tested the first time, took out stop losses because everyone had put in their order, took out their stop losses, came back again, will accumulate more orders, and then we only enter. Remember I mentioned this yesterday, I'm still going to repeat it again. You only enter this market once it breaks below, retests, then we're going down. That's what we're anticipating. Breaks below this consolidation area, comes for a retest, prints what you call a last kiss candle, then now we're going to go bearish. So at the moment, we're still patiently waiting. We're not going to rush into this market. We want to catch the full move. We don't want to jump into trades that we are not sure about. We're just going to take it slow, take it easy. The market will show its hand. The market will show its hand, and that's what we've trained all this time to do. To be able to see what the market will anticipate, plan, then once the market follows through, execute. Because that's the most important part. But let's continue watching this market. Today is on a Friday. We are anticipating there's some news that is going to drop throughout the day. They're just minor news, but it's good to consider them because they might give you the volatility you need to break through. Come have that retest, then you're ready to now drop. It's good also to note this is the second last week of the month. So if you go up to the monthly, this is very important. If you go up to the monthly, I'm going to remove everything. If you go up to the monthly, notice something. In the monthly, market is still bearish. Printed one engulfing. This candle we're expecting to drop. We're expecting this market to drop all the way down. This engulfing candle is irrelevant because it is against the trend. Notice the same thing happened again. It's against the trend. Yeah. So we are anticipating some very nice bearish move, and that should close the month strong. So by the end of next week, we're expecting this candle to close strong bearish. That you can continue going through the next anticipated area of reversal, which is this lows of 0.6287. So let's continue watching the market. Be patient. Don't rush into trades. Protect your capital, protect your mind, protect your psychology, and only trade obvious trades. Obvious trades are the ones that are playing out right now. Let them be obvious. Once they're obvious, take the trade. Once it's obvious, take the trade. I cannot emphasize that enough. So we are watching this market. We're waiting for it to break below this area. Once it breaks through, we'll enjoy the pips down. Okay. So the second scenario where you're expecting the market to bounce off the trend line, this trend line is a rather low probability setup, because for that to happen, we'll have to wait for the market to break above the head, retest that head area, then now we're going up. So still, patience, everything. Patience, everything. Patience is everything. Okay, see you on the next one.